Welcome to InvestingRamp, where we explore ways to ramp up our investments. Today, I'll share some smart strategies for us to minimize investment risks. Let's begin. As a side note, my goal, and maybe yours too, is about protecting my downside risks, aka large value drops, while aiming for consistent long-term growth. So, let's get into 4 strategies you might like. Hey, don't put your eggs in one basket. Diversification is the key to spreading your investments across different assets. By mixing stocks with bonds, real estate, etc., you're less vulnerable to a single investment compromising entire portfolio. For example, I'm loosely allocating 60% towards individual dividend stocks, 20% towards ETFs like SCHD, which holds 100 stocks, 10% towards REITs, aka real estate investment trusts, and 10% to growth stocks like Microsoft, and you can find your mix. Second, do in-depth analysis to uncover hidden gems before diving into any investment, whether it's a stock or an ETF. Roll up your sleeves and conduct thorough research. Analyze the company's financial health, growth prospects, and industry trends. The more you know, the better decisions you can make. Here are just some metrics to consider: PE ratio, payout ratio for dividend lovers, and much more. Third, don't chase yields. Quality over quantity. High-yield stocks might seem tempting, especially at high interest, high inflation time like now. But remember, not all that glitters is gold. Beware of investments that promise sky-high returns with minimal risk. Often, such offers are too good to be true. Instead, focus on the sustainable dividend or return growth over time. In my book, a steady, reliable source of income is far more valuable than a short-lived spike, so I keep exposure to risky investments to a minimum. Last is number 4. Stay the course. Remember, patience pays off, as the saying goes. Investing isn't a sprint, but a marathon. Another one I like is, time in the market beats timing the market, because it's true. Market fluctuations are inevitable, but don't let short-term noise shake your confidence. Stick to your investment plan, adjust it periodically as you go, but keep investing to leverage compounding to full extent. Keep these 4 principles in mind when investing and you'll have no trouble protecting your downside, while consistently ramping up your investments. Thanks for watching, and as always, let the compounding force be with you.